In today's video, I'm going to take a look at gold. As you know from some of my previous videos, I'm expecting a counter trend rally in commodities here soon. I'm not convinced yet that it has started, but I don't think it's far off. If it hasn't, it may have. But anyway, let's focus on gold in this particular video. So I'm not sure yet that this is a double bottom. It's a bit concerning to me that gold was driven right below this 200 week. This is a weekly chart, weekly moving average on the first attempt. A normal market, I think, would have bounced off that. But as I've said many times in the past, we've got an election coming here in about 2.5 weeks. The administration wants commodity prices depressed if at all possible, and they want stock prices moving higher. So there's going to be efforts to keep commodities suppressed, and the main strategy, I think, is just to keep the metals suppressed. And then if they can do that successfully, most of the other commodities are probably not going to get too much traction to the upside. So this is a concern to me. Price went right through that 200-week moving average on the first try, and then it tried to recover a few weeks later, but that was defeated very quickly and pushed back below that, and now we're still stuck below it. So, and we're stuck below this. We're stuck below this resistance zone here. This all of these pivots that gold was holding above. And then we broke below it, tried to recover, immediate attack to drive it back, and we're still below it at this point. So I mentioned the other day and let me convert this to a daily chart first. So this double bottom came really early in this daily cycle, and the vast majority of daily cycles in gold will last anywhere from 30 to 50 days. I think this was maybe day 16 or 17. So that's really early, which makes me suspicious that this might not be a true double bottom. So, we put some hedges on here just in case, because we've got some long positions working. But just in case, this has to come down and make a lower low if the attacks continue between now and the elections, and gold has to come down and make a lower low and give us a more normal duration daily cycle. Then I want to have those hedges in place just in case that happens to dull some of the drawdown on those long positions. And I actually gave subscribers a trade yesterday that's going to profit no matter which way it goes. We're expecting a volatile move. We just don't know whether or not it's going to come to the downside. If we were to break below this, we would probably open the door for some kind of a bloodbath phase, or whether the bulls can defeat these attacks, get gold back above this resistance zone, and I'd say more importantly, it needs to get back above 1700. And in that case, then at that point, I would be inclined to say, yes, we got a double bottom and just a really short, unusual daily cycle. And at that point, we would lift the hedges and let the long side work. But at this point, I don't know which way it's going to go. So I want to have a strategy in place that's going to profit from a big move. And it doesn't matter whether it's to the upside or the downside. We just need a big move one way or the other. And I went over yesterday a trading strategy to profit from that expected big move, whether it be down or up. So that's kind of where we're at in gold. We're kind of in no man's land right now. This is really too short to be a normal daily cycle low, but I'm not completely convinced that we're going to come down and make a lower low, and I'm not convinced yet that we're ready to break out above this resistance and move higher and close this gap, and I've done multiple videos on this. The gap in the miners is extreme. We need a regression event to close that gap, and I think I would be willing to make the call that even if gold does come down and make a lower low, I think the miners would resist. I think there would be a divergence. They appear to be kind of stuck going sideways. So if gold does, if they do break gold down and produce, a breakdown in a bloodbath phase, I think the miners are going to diverge and not make a lower low. So when we do get this counter-trend rally that I'm expecting, I think the biggest potential is going to be here in the mining stocks to close this big gap between price and this 200-day moving average. And it's not quite as apparent here on a closer view, but let me back this chart out and you can see just how extreme this gap actually is. All right, so here's a longer term view. You can see really the only other time that price has been stretched this far below the 200-day moving average is at this COVID bottom. So a lot of potential here in the mining stocks for a sharp regression event back up towards this 200-day moving average. We just need to get some kind of confirmation that counter trend rally in the commodity complex is starting. And again, I've gone over this before, but I think commodities are stuck in the declining phase of their multi-year, 3-year cycle. So I do expect that it's going to be a counter trend rally, not the beginning of the next bull move in commodities. So the timing band for that bottom would be next spring or fall, spring or summer, sorry. So all I would be looking for right now is a counter trend move in commodities that probably won't make a higher high. Same thing here in the miners, just a sharp counter trend move to close some or all of this gap, maybe even become a little bit above the 200-day moving average. But then I think we've got one more trip down into the spring or fall of next year, and then that's, I think, where we get our final bottom and we start the next bull phase in the secular commodity bull market.